Can you imagine that just $100 could be the seed for a prosperous financial future? In an age of inflation and global volatility, how can a simple investment make a difference? Let's start with why you should invest now. First, inflation eats away at your purchasing power. Global inflation rates have topped 5% in some major economies, so leaving your cash in a savings account alone will erode its value over time. Next, there's the power of compound interest. Your investment journey can begin with as little as $1, but real growth comes from time and compounding. And by starting early, you benefit from years of growth instead of waiting to accumulate savings later. Before you put that on $100 to work, cover your basics. Make sure you have an emergency fund with 3 to 6 months of living expenses, and pay off any high-interest debt. Credit card APRs can exceed 20%, so it's smarter to eliminate that debt before entering the markets. Now, you need a simple, reliable platform. Micro-investing apps like Acorns automatically invest your spare change, while Stash lets you buy fractional shares for just a few dollars. Traditional brokerages such as Robinhood and Fidelity offer commission-free trades but often require higher minimum deposits. And robo-advisors like Betterment and Wealthfront will build a diversified portfolio for you based on your risk profile. What should you invest in? Exchange-traded funds, or ETFs, give you low-cost exposure to hundreds of stocks or bonds at once. Fractional shares let you own a piece of big companies, like Apple or Amazon, for just $1 or $5. You can optionally allocate a small amount, say $5 to $10, to cryptocurrencies like Bitcoin or Ethereum, but be mindful of their high volatility. A balanced example portfolio might be 60% equities via ETFs, 30% bonds, and 10% in digital or alternative assets. Here's a smart way to invest your $100. Use dollar cost averaging by committing $10 to $20 each week instead of all at once. That smooths out market swings. Enable dividend reinvestment wherever possible so your earnings automatically buy more shares. And keep your expectations realistic. The inflation-adjusted historical return of the S&P 500 is about 7 to 10% per year. Managing risk and your own psychology is crucial. Don't put all on $100 into a single stock. Diversify across multiple assets to reduce risk. Avoid panic selling when markets drop, and maintain a cash cushion. Always keep enough liquid funds to cover a year's expenses, so you can weather any crisis without stress. Once you've started, look for ways to grow your portfolio. Increase your contributions over time. For example, bump your weekly investment from $10 to $20 as your income rises. Keep learning by following reputable blogs, podcasts, and online communities for beginner investors. And never forget to invest in yourself. Building new skills can boost your income and let you put more toward investing down the road. The first step is always the hardest, but with $100 today and a steady resolve, a brighter tomorrow is on the way. Start now, invest smart.